Good afternoon, everyone, and welcome to our webinar, Issuer Readiness and Practical Tips for Dealing with 3D Secure. Today, we will be talking about issuer intelligence and why this is key for your strong customer authentication strategy, how you can maximize your transaction risk analysis and exemptions to help avoid cart abandonment. Nets will be providing us their insights through some lessons of a previous authentication rollout plans in Denmark, as well as providing some key issuer tips for merchants through the lens of a payment services provider. But first off, some introductions. So in case you haven't heard of Ravelin technology before, our mission is to provide our clients with the world's most accurate fraud detection service to make online commerce a safe place to do business, whilst maximizing payments acceptance. We serve clients in over 185 countries. We produce over 4 billion fraud scores every year, and have trained over 51,000 models. A little bit about me. I focus on payments and authentication at Ravelin, and my role has recently been focused on the second Payment Services Directive and Strong Customer Authentication. I work on a product called Ravelin Accept, which helps merchants improve acceptance under the new SCA rules. My background has been both on the acquirer and the merchant side, and always focused on fraud and authentication in the e-commerce space. Sune, over to you.
Thanks a lot. A short introduction to Nets, if any participant is not aware of who Nets is. So in Nets, we are a large payments provider in the northern part of Europe, servicing a lot of European banks, 250 plus banks, mainly originating from the Nordics, the very highly digitized part of Europe. Also on the acquiring side, we are serving above 700,000 merchants, all kind of merchants, and I think that's enough about Nets. A little bit background about myself. Just prior to joining Nets, a little bit more than a year ago, I was a part of the Global Fraud Unit and establishing the Global Fraud Unit in Danske Bank, Denmark's largest banks. I was around there for 4.5 years, building up this global fraud unit. And before that, I have a background in police, law enforcement, and national security intelligence service, working a lot with organized criminals and financial crimes over the time. So basically, I've been working with fraud and criminals all my life. Sad story. When I joined the financial sector, I learned a lot of lessons, and one of the things I learned was that I needed some academic background, so I actually did a master's in counterfraud, counter-corruption, and that was to gain some insights from the academic world. What it also provided was, some insights into the victims' heads, the drivers, motivations of the victims, because I've basically been investing almost 20 years to kind of travel inside the head of a criminal. So the last couple of years, I've been trying to travel inside the head of the victims of fraud. I just want to share with you the threat landscape, because I think it's very important for us that we have kind of the same foundation and understanding of who the enemy, so to speak, is. So who are the criminals out there? Because this is also one of the learnings I have when I joined the financial sector. Before joining the financial sector, I only saw the 3 white bubbles you see on the screen now. I didn't realize that we actually had a fourth actor. I'll get back to that. On the left side of the graph, you can see how many money you as a criminal can get out of the crimes you're doing. And at the bottom, you can see how many victims you can actually reach. And if we go back in the good old days, it was a little bit limited what some of the criminals could do on the very advanced attack types. That was more the hacker types, and not all of the hacker guys are actually evil people. They are just, doing this because they can and because they think it's funny and interesting. But what actually occurred, maybe it's all the way 10 years back, was a phenomenon that arose from the organized criminals reaching out to the hacker types that created this orange bubble that I have named fraud as a service. And this means that today the sky is the limit on the amount that you can get out of the crimes, and the number of victims is almost, unlimited. because on the dark parts of the internet, in the dark corners of the internet, you can literally buy kits that can make you capable of doing very advanced attacks, not only fraud related, but also to cyber threat related stuff. And that has kind of changed the threat landscape dramatically, because before you might have 1,000 people worldwide scale that could do very, very advanced attack. And today, basically everybody can do it. So you need to realize that no matter what kind of actor you are, whether you're a bank or you're a merchant, because if you don't realize that threat and you think that you can hide somewhere on the internet and your goods is not attractive to criminals, then it will just be a matter of time before you will be attacked. And you will realize that if you are the weakest link, then you will be haunted by criminals that will cash out in your shop. And you will also be surprised by what defines a high risk goods. So you might have goods that are highly relevant and high value for criminals. So it's just to realize that we need to step up this, because criminals, they will find you and they will find the cracks and the gaps in your security setup, and then they will use it until you mitigate it. Yeah. So then I think it's back to you, Catherine.
Thanks, Sune. That's really interesting, and we need to remember, obviously, that the increase in fraud and the sophisticated fraud, the more sophisticated fraudsters get. This is why things like the Second Payment Services Directive have come into place. So, obviously, we need to fight back and make sure that we continue to monitor fraud as best we can. So, to kick things off, let's talk a little bit about issuer intelligence. So we all know that there is hesitation in applying strong customer authentication for good reason. 3D Secure generally comes with a risk of cart abandonment and reduced conversion rates, as it adds friction into the customer flow. So if an issuer turns the dial up to 100% 3DS today, this will mean that they start to fall behind on acceptance rates. They risk losing their cardholders, and this negative customer experience will be passed on to merchants too. Furthermore, there is the potential for lots of inconsistency in the way in which authentication may be performed. For example, one issuer might rely on biometric authentication, and others also use unique passcodes sent via SMS. Each issuer might choose a different standard, which can be confusing for cardholders. There are also different dates to comply with depending on who you are and where you operate. For example, an issuer in Germany might need to be SCA ready before an acquirer needs to in Spain. And with the recent announcement from the Financial Conduct Authority that the UK will delay enforcement by 6 months, and the pressure across Europe to delay enforcement as a result of COVID-19, all timelines now feel a bit up in the air. We must also remember that cross-border commerce is fairly common in the European region, but there are multiple inconsistencies across scheme and national competent authority rollout plans. In addition to all this confusion, there will be further nuances in the issuer's approaches to managing exemptions and other 3DS2 features, such as soft declines and frictionless authentication. For example, an issuer might be 3DS2 ready, but they might not be honouring exemptions just yet. And if they are honouring exemptions, it could be that they are focused only on certain types, such as whitelisting, but not low value. Lastly, all of this behaviour might also vary depending on the issuer and the acquirer country, and it will evolve over the next couple of years or so. So it's not only a case of merchants being aware of the deadlines and which issuer is SCA ready, but also what their SCA strategy is. Amongst all this confusion, it's useful to have a solution which can help manage these developments and nuances in issuer behaviour. Something like Ravelin Accept can help with these challenges by agnostically learning what issuers are doing today and generating recommendations to maximise payments acceptance. Accept will take in data such as the card BIN, merchant category code, and issuer country, and use a combination of issuer intelligence and machine learning to help determine a recommendation. This recommendation could consist of whether to authorise or authenticate. Perhaps it could recommend whether to use version 2.1 or 2.2, or whether to request a low-risk or low-value exemption. Furthermore, it will soon be able to help enrich the 3DS authentication request with our rich merchant data, which we'll come on to in a little bit. Furthermore, we are also working on building our own 3DS solution so that we can help you manage authentication in the future too. Ravelin Accept will be able to offer transaction risk analysis, authentication, and data enrichment all in one place. So we've talked a little bit about why issuer intelligence is so important for your SEA strategy, and that understanding issuer readiness today can help you remain compliant without impacting conversion. But it's also important to maximize your transaction risk analysis and exemptions to help keep fraud low whilst avoiding friction as the use of SCA increases. Firstly, the European Banking Authority has released regulatory technical standards which have guidelines about what data points must be assessed to comply with their version of transaction risk analysis. Furthermore, there are additional steps which must be adhered to, especially if a merchant or acquirer wishes to use exemptions, and in particular, that TRA or low risk exemption. The most important thing to do is to make sure you're following these regulations. If an acquirer, and therefore merchant, wishes to make use of the TRA exemption, acquirers must inform their national competent authority and ensure that they are documenting the TRA process. It's also very important that acquirers, and therefore merchants, stay within their reference fraud rates as outlined by the EBA if they wish to apply for exemptions. So even if as a merchant you don't have these direct responsibilities, you need to ensure that you work with your acquirer and that they are taking the right steps. Having an optimized fraud tool to conduct transaction risk analysis is key. Multiple data points need to be assessed within milliseconds to avoid latency throughout the payment journey. Unfortunately, a rules engine alone isn't going to cut it. This is an opportunity to get ahead and ensure you can outperform the TRA requirements by enriching data and in using the latest technology to assess risk. By keeping your fraud low, you'll have further opportunities to avoid friction. We must not forget that there are also merchants out there who have existing fraud teams, knowledge and tools. They tend to know their customers and fraudsters better. Acquirers and merchants should consider outsourcing TRA so that merchants can continue to handle their fraud, which in turn benefits issuers and acquirers. This also provides merchants and issuers the possibility to share data through 3DS, helping issuers to support exemption requests and frictionless authentication. Merchants can share the data issuers don't usually have access to, such as customer account and order information. So in order to maximize TRA and therefore have more opportunities to create less friction for your customers, ensure that you're following the regulations. Use a strong fraud tool to conduct TRA and consider outsourced TRA to ensure that issuers are able to get better access to merchant data and they can better provide the order and customer data. So what about maximizing exemption requests? Well, by enriching the requests, you have an even higher chance of securing exemptions with issuers who are ready to manage them. It is worth reiterating that exemptions cannot be requested if your fraud rates are too high. So although the reference fraud rates apply to PSPs, merchants need to work on getting their fraud rates down too. Staying within these thresholds is absolutely key, or else you risk losing transactions with added friction in the customer journey. When considering your rollout plan for 3DS, please bear in mind that it is only 3DS version 2.2 that supports exemptions. There are indicator flags in the request message which enable European merchants to communicate their SCA exemption requests to issuers. So even if you're requesting that authentication not be used because the transaction is exempt, you still need to use the authentication request messages in the 3DS protocol to request that exemption. But how exactly does that work? Well, we have this very, very high-level diagram here for anyone who is completely brand new to 3DS. There is, of course, lots and lots of code required on the back end to support this, and I should reiterate that this process has been simplified to assist those who are not quite sure what happens in the background. So the 3DS server itself forms the authentication request, or rather the AREC, and there is only one of these per authentication. Now, you do have the option to send enriched AREC features to an acquirer or whoever is providing 3DS for you, which is something that a tool like Ravelin Accept can help you do. We can help you to prepare that message with enriched fraud data. So the 3DS server generates the AREC, which is sent to the issuer's access control server via the card scheme's directory servers. This is how the issuers can receive all that enriched data and hopefully approve that exemption request or apply frictionless authentication. For clarification, if anyone's really unsure about how 3DS works behind the scenes, an authentication response, or rather an ARES, is then returned to the 3DS server with the outcome of the AREC from the issuer. There are 4 groups of optional but recommended fields in the AREC, which are outlined in the EMVCo specifications. 32 of these are classified as 3DS request for information. If you aim to enrich these fields and send all those that are optional where possible, this will maximize your chance of the issuer respecting your exemption request. So, in summary, to help maximize the use of exemptions, firstly, make sure that you're getting your forward rates down. Support 3DS version 2.2 where possible. And most importantly, consider enriching the initial fields required in the AREC to ensure these data insights can be passed on to issuers through 3DS. This gives you the option to share as much data with the issuer as possible to help secure an exemption request, and most importantly, avoid losing the transaction because of added friction in the customer journey. So with all that in mind, let's move on to Sune, and I think he has some lessons for us from some previous rollouts in Denmark.
Yeah, and I really hope you will find it interesting. I think you also mentioned, there's a reason behind us having the second payment service directive and applying the SCA, and that is because the fraud in the card world was kind of spinning out of control. So you need to remember that it's not because there's evil people in EU that want to stop every kind of development in the world. This is more like a response to a challenge that we need to solve. And I will try to give you an example of that I hope you will find, first of all, interesting, but also see it as a little bit of a sign of that it is possible to get this right. So what you see here is the fraud rates for our national card scheme in Denmark called the Dancard. And I forgot to mention that during the presentation of Nets. So the Dancard is owned by Nets. And the orange line or the brown line you can see is the card not present fraud, and the blue line that you can just see a little bit of in the bottom is the fully authenticated 3D fraud called Dancard secured by Nets. And what we experienced in 16 and in parts of 17 was a very, very high number of fraud cases. So we decided to try to challenge that fraud problem with Dancard secured by Nets, one-time passcode in a text message, and we introduced that in the summer of 17. So in July it went live, and it was a very, very rudimentary solution with simply providing a text message for the cardholder, informing them about a 6-digit one-time code. And from day one, we saw fraud rates decreasing. And the interesting learning here is also that instead of just applying this for all merchants, we decided to go with the merchants that had challenges with fraud. So we did a little bit of KYC and understood who of our customers might have a need for this, and just instead of just applying it for everybody, because there's no need to do that. And it will actually also make the world a little bit more complicated for criminals if you don't have a one-size-fits-all approach. So we went out and had a dialogue with the merchants that experienced challenges, and that was not a very high number of merchants, but it was actually those merchants that kind of created a lot of fraud cases. We have very positive dialogue with them, and also allowed them to do a little bit of a risk-based approach to when they wanted to apply the Dancard secured by Nets with the one-time passcode. And then we went live, and immediately we saw this fraud decreasing just by applying it to the merchants that were challenged. And it's very important for me to say that it's not because those merchants were poor at detecting fraud. It was simply because that was merchants selling some very interesting and high-value goods as perceived by fraudsters. So that's why they were targeted. In the beginning of 2018, we saw a change in the way that the criminals they behaved and the modus operandi of the criminals, and that is also a signal for you to understand that there is no silver bullet out there that can stop fraud. You need to have a layered approach and have different solutions, tools available to prevent fraud. You cannot rely on that the SCA will solve everything. Because what we realized was that we actually were seeing an increase in real-time phishing, social engineering, in wishing, where the cardholder were manipulated and tricked into handing over this one-time code. That was mainly happening on the international card portfolio that our issuers had. And therefore, we introduced an enriched one-time passcode, where we actually informed the customers about what amount they were buying, the currency, the merchant that they were buying from. And that actually helped a lot mitigating the fraud on the international cards. At this time, we also had a dialogue with the merchants to understand, so what were their experience with applying this friction to the checkout phase. And the interesting thing was that the feedback, and that is the same feedback we still receive today, here almost 3 years later, is that what they experienced by applying this was that fraud disappeared and no abandonment rate increase. So it's a kind of a very positive story. One thing that we just need to remember is that this is for mainly Nordic citizens, and people in the Nordics are pretty digital native, and we have had digital identities for decades, and digital identities in the Nordics comes with a little bit of friction, with challenges. So this is in an environment where people are used to having some friction. And I will get back to that a little bit later, but it's just important for you to understand, because this is also about patience. So people need to learn what is this new friction, and also understand what the friction can do. So just telling your customers why this friction is added might help you reducing your abandonment rate. The viewer here will see that there is a spike in the brown card not present fraud, and that is in November 2018. And that is actually quite interesting, because what happened in November was that one of the merchants that were onboarded for Dankort Secured by Net, they had a risk-based approach to what kind of exemptions and limits they wanted to add to this one-time code, Dankort Secured by Net. And their risk assessment kind of made some exemptions on some of their goods, different parameters they used for that. But what happened was that the criminals from, you could say the beginning of their usage of the Dankort Secured by Net were trying to game the system and trying to figure out, where is the exemption? Is it something we can use? And this is something that you need to keep in mind when you think about all the stuff that can be done in the new 3D 2.x version with exemptions and so on, because fraudsters, they will try to find what the limits are and where they can bypass the security measures, and that was what happened here. And when we then changed together with the merchant, changed the risk assessment and introduced new settings for the Dankort Secured by Net, fraud completely disappeared, and to be honest, we haven't seen it ever since. If you then look at the bottom, you will see the blue line, and that is fraud where it's fully authenticated 3D, meaning that the cardholder received the text message and actually either typed it in somewhere or gave it to someone. And that is also very important for you to remember, because this is also a reason behind that banks will not completely trust the SCA alone. So again, the one-time code or the push message is not a silver bullet. It can reduce fraud significantly, but it is not a silver bullet, because criminals are very creative, and as I also explained here before, they are actually capable of adapting to your new security measures. So what will happen in the period after we apply way more 3D OTPs, one-time passcodes, is that fraudsters, they will just adapt to that and develop new methods to bypass that kind of security measure. So, but I think that the good news is here that we actually didn't experience abandonment rate increasing at merchants. It was just fraud disappearing. And I hope that you find that as good news. I see it as a signal of what will happen after the period of more SCA. And then I want to jump to some of the tips and tricks for understanding how issuers they think and how they behave. And as mentioned, they don't believe in silver bullets. So that is the reason behind that they will not just accept the solution with SCA as the silver bullet. One thing that is very important is that you are patient, and that goes both in relation to the issuer, the banks, but also with your customers. So you need to inform your customers about what is happening and have a dialogue with them, and then they need to adapt and learn what this is about. One of the things, and I will also get a little bit more back to that later, is that adding friction in the Nordics is highly accepted, and actually sometimes if there is no friction, people they feel insecure because they feel that this is very risky business we're doing, and where's the friction that we are used to. So I think that is also about being patient, that people need to have that kind of journey to adapt to this new security measure. And then just remember, there's a reason for this new security measure to be applied. The second good advice is to pass on as much data as you can through the new 3DS solutions. Of that, the issuers will start using the data that you pass on as a feed for their risk assessment, and they might not use it today, but if you have passed that data on for 6 months, then they actually have a historical data set that they can use the data they want to go live with that. So I think it's just important that we just start as soon as possible with sharing as much data as possible. And then also demonstrate for the issuers that you actually know what you're doing and that you have the low fraud rates. And I will get back to that on the following slides. But issuers, they will calculate your fraud rates. So it's not alone that they will trust what you tell them, but you need to invest in having these low fraud rates with something like the product that Ravelin are offering you. It is very important that you show that you know what you're doing and that you also are part of the solution and not the problem. That is about building the trust to banks. And then just understand that the whitelisting will not be a silver bullet for you. And there are different reasons for that. And again, I will get back to that on the following slides. And then what I also talked about with our Danish story, know your customer. So instead of just having a one-size-fit-all approach to your solution, then have different solutions that fits the customer's needs. So here, again, understanding your customer will be key to how you will succeed with applying the SCA. And then let's move on here to the delegated SCA, because I think that this is, or at least it's my perception, that it's a little bit of a headache for some merchants, and people are wondering whether they want to invest in the delegated SCA. And one thing that is very interesting is that if you have the delegated SCA, you also have the opportunity as an issuer not to be completely liable. And that is interesting for everybody, of course, to not be liable. But it is just, a way of being very attractive for issuers, that you're also willing to take a little bit of the liability instead of just leaning back and saying that every time we have the SCA, then I'm good to go. So this is very important from an issuer perspective. And then what you can also signal by having the delegated SCA is actually that you have been working with your acquirer to achieve this delegated SCA. So banks, they know that you have been doing something, and chances are that you know actually what you're doing. So they will have a likelihood to trust you even more if you have the delegated SCA. But you will still experience that that transactions will be declined, because the banks will always monitor and do the fraud prevention and the risk assessment on any given transaction. And my recommendation is that you talk to your acquirer and see how you can achieve this, and maybe also get the help of Ravelin in this area. And then just maybe realizing that if you apply the delegated SCA, you might need to, for example, do some manual handling of some of your purchases to ensure that you don't ship goods to a criminal. That could be a way of mitigating the risk of that delegated SCA. And then the transaction risk analysis. I also have a perception of that being an additional headache for merchants. One thing that is important to understand here is that it might not be something that the issuers they will support. They might be stepping up 100% of their transactions, and many reasons for that. One of the reasons is that there is a lot of things on the agenda on the development side for issuers. So there's a lot of compliance projects. And I'm not trying to make an excuse here of why we shouldn't expect them to invest in this, but it's just to understand that there's a lot that are higher prioritized than this. And that is maybe also where you have to be patient, because then they might need to learn that their customers are actually demanding to have something like this. So I think that here again we need to have some patience to see how it will develop. It might also be explained by the banks, the issuers having some fraud rates that are very, very close to the exemption limits. So they want to do everything they can to defend the fraud rates, so they don't, get to the next tier where they have to take their exemptions limits even lower. Again, there's a lot of factors playing in here that you need to kind of understand. On the merchant side, I would say again here, share as much data, because over time, all issuers will use the data that you provide them, and also pass on the fraud rates as you calculated it. But just remember that that issuers, they will calculate your fraud rates, so they have to be pretty similar for banks to trust the fraud rates that you report, and that is something you can pass on in the 3DS 2.x version. I think it's 2.2. We Nets, we are already linking the authorization system to the authentication in real time, to not only improve our detection rate, but also to have a better balance on the false positive, and that is something that will happen even more in the future. Yes, and then moving on to the whitelisting. I think a lot of people, when they heard about whitelisting, they start dreaming about all the good stuff that can come out of whitelisting. The only challenge is again here that it might not be something that will be prioritized by banks, simply because that there's a liability issue with whitelisting, and again, if they have fraud rates that are close to the limits, they need to protect themselves. Some have made it as a deliberate decision that they don't want to do this, and some of them are simply not capable of doing it. And I think that for you as a merchant, it is very important that that you engage with your customers here, so you are sure that everybody is aware of that something like whitelisting is actually existing, so that the customers of the banks and issuers can actually start asking for this as a service. I think that is one of the key elements that we can bring in to ensure that we will have more whitelisting in future. One of the reasons for banks might not be as fast to go for whitelisting is also that some of the merchants that have the very high volume where it would make a lot of sense to do whitelisting, that's actually also the merchants that we see fraud with. And that is totally natural, because there's a high volume of transactions, then you will also have some fraud. So that is also, a risk assessment on, do we want to invest in this if we cannot completely whitelist the big merchants that we actually hoped to whitelist. So we need to navigate and find a way how to kind of mitigate that. And then again, this is also an area where you need to be patient. We have actually developed our solution, so we are capable of offering a whitelist management solution for the issuers. But it's not every bank that that is very happy and keen to jump on and start whitelisting. So I think here it's also a matter of understanding how the issuers they think, and I hope I provided a little bit of insights on that. Then the last one, I mentioned it several times. I think that it is very, very important that all of us, we know our customers. And different reasons for that. One of them is because if we know our customers very well, then we're also very capable of detecting fraud or suspicious activity. And the other reason for knowing the customer and the value of knowing the customer is that you will be capable of delivering that unique customer journey for your customer. And I think that as I also mentioned, actually some people they like friction. So if you have a lot of customers in the Nordic, then a normal text message solution or whatever it is might be the right solution for those people, but then you have people that are not used to that and they might have a need for something else. So you need really to learn about who your customers they are. Yeah, I think that that covers it pretty much. I think that the only thing I want to mention is that you might also experience that issuers they have more than one customer journey for this authentication. So you cannot rely on that on the issuer side of this, that the authentication journey looks the same for the cardholders, even not for cardholders from the same bank. So you will also experience that actually banks have invested in understanding the customers here. Yes, I think I covered it pretty much, and I think Catherine, we're ready to kind of sum up what we have discussed.
Perfect. Thanks, Sune. It's really interesting to hear your perspective on this topic, and it certainly sounds like it'll take a little bit of time for trust to be built up between issuers and merchants, especially in countries where two-factor authentication is less common today. So in summary, it's useful to remember these tips to help deal with 3D Secure. Certainly use intelligence to understand when you need to apply strong customer authentication and when exemptions should be used. Maximize transaction risk analysis and exemption requests to avoid friction in the customer journey and cart abandonment. Learn from the lessons from previous authentication rollouts and make sure that you're prepared. And think really carefully about your strategy. It could be the case that one size doesn't fit all. So I'd like to thank everyone for attending and now hand over to our attendees for any questions they might have. And also, I just want to take a moment to say that I'm sorry to hear that some people had some issues with the audio at the beginning of the webinar. But as my colleague Jessica said, a recording will be sent out after the webinar as well. So just wait a couple of seconds for some questions to come through.
I see a question from David. And I think maybe David had to elaborate a little bit. I just need to understand it. David is asking, is it common for issuers to decline authorization after successful authentication based on a risk review? So I think that when the authorization is done, then the transaction is pretty much kind of went through successfully. So then it will not be declined. But of course, there will still be investigation ongoing, so merchants could experience that they would receive information about maybe not sending the goods, and that is also what is happening in the world of MasterCard with merchant collaboration and also the system that FOK have built up, where actually issuers and merchants can communicate. I hope that answers the question from David.
Yes, I think you're right, Sune. I think the only sort of exceptions could be, declining the authorization after authentication for a non-fraud related reason, perhaps, which could still happen. But I think under delegated authentication, the issuer could still decline the transaction if they believe that it's still sort of risky for some reason. But we'll have to wait and see. I think probably under these sort of the new SCA scenarios, it's probably unlikely, but it could depend on the issuer, of course, depending on where they're based and sort of where they are and how confident they're feeling. We have a question from Peter as well about how much adoption of whitelisting that we're seeing. Sune, are you sort of and Nets seeing whitelisting being picked up in different countries, or perhaps for certain transactions?
It's not the first bullet on the agenda, I can say. We have, I think, so far only had dialogues and discussions about it. So I'm not able to provide a precise number of how that will look, unfortunately.
Yeah, definitely. I think even on a sort of personal level, I mean, I haven't seen an awful lot of options around whitelisting. I know there was some confusion at the beginning as well around sort of how exactly that might be implemented sort of at the end of the customer's checkout journey after they've completed authentication, or perhaps by logging in. I think there are some different ways of doing it. American Express obviously one of the first to get there, but I have a feeling that it probably isn't picking up as quickly as some merchants probably would have hoped.
I think David, he's elaborating a little bit on what he actually asked, and I think that he is asking, whether it's normal for issuers to decline after a risk-based approach have been kind of applied. And I think maybe I don't understand the question, but I think that the way that it's done today is pretty much that the risk-based approach normally would lie at the merchant end, but there's not a lot of an awful lot of information floating to the issuer side. So today it's very, very minimal what we use of kind of you could say intelligence on how the merchant have kind of scored their transaction today. It's more of looking at the fraud rates of the merchant and see who are experiencing very few fraud cases and who are experiencing a lot of fraud cases, and maybe also trying to evaluate who's good and who's not that good of evaluating their transactions.
Cool.
I hope that's the answer. Otherwise, David, you have to shout out or get in contact with me. Love to discuss this.
Another interesting question is around sort of different currencies. So is there a global approach to define the low value exemptions for different currencies, since it's described in the euro? And I've seen sort of a few different approaches to this. I don't know if there is one defined approach. As far as I'm aware, that there isn't. But obviously, there's lots and lots of other currencies that are used other than the euro. Obviously, here in the UK, we've got pound sterling, and where Sune is, obviously, they're using Danish kroner. So yes, I've seen at least for some countries, competent authorities are just advising to use sort of the nearest rounded up equivalent. So, for example, in pound sterling, it would be £30 instead of €30. And interestingly enough, the Financial Conduct Authority has also stated that depending on what the Brexit deal looks like, when we write this into local law, it could actually just be the whole text would just be put into pound sterling instead of the euro, which is quite interesting. Sune, do you know what's happening in Denmark or any of the other regions that Nets looks after?
Yeah, so that would be some, an amount in the local currency equivalent to the euro threshold. So.
Okay, that's interesting. Yes, one to watch out for, definitely.
Absolutely.
Just reading through some of the other questions. There's one here on sort of any tips on handling post-payment use cases where the full amount of a transaction is not known up front. So here I can think of sort of classic cases of taxi journeys, for example, where you sort of might authorize for an initial amount, but the actual total might be different. Obviously, there's lots of other use cases, I suppose, in hotels as well, where you might have an extra service charge at the end or something. And I've heard lots of different stories about different companies trying to take on different approaches to this. So I think I think it's up to every single merchant to decide sort of their best strategy whilst trying to align with the regulation. So, for example, I have heard of some clients sort of in the industry who are considering sort of using merchant-initiated transactions. But I think you sort of have to tread that one very, very carefully, because although merchant-initiated transactions are exempt, you need to make sure that your use case for merchant-initiated transactions actually aligns with the regulations themselves. And I have heard others as well sort of sending them through as 2 separate transactions, which might have to be authenticated, but also a third scenario where you authenticate for the higher expected amount, but then you authorize for the amount that's less. And as far as I'm aware, the Visa and MasterCard guidelines are to sort of authenticate for the higher amount. And I know that the card schemes will sort of be watching that quite closely. Now, the thing to be careful of there is obviously if that higher amount takes you over the 30 euros, and if you're hoping to use a low value exemption, that makes it quite tricky. So it's probably best to work this out with your acquirers, because they might have an approach they're taking with all of the clients that are in their book. Sune, again, I don't know if this is something Nets have thought about at all.
No, I think that is one of the areas where we kind of need to be patient and learn how it will evolve. I think that the only thing that is very important is that it's very transparent for the cardholder, so they will not be surprised, because I think a lot of the cases that comes out of this type of transaction is because somebody feel that they were overcharged and they didn't have an agreement about this transaction or the volume, the amount volume on the transaction.
Yeah, definitely.
I see one question here from Ekle that is asking, how do you overcome the obstacle that issuers are usually only sending back general decline messages to train your models? Yeah, that's a really good question. I think that and maybe I forgot to mention this, because I think that you should try to use the declines as a data feed for your investigation, also for your model. And of course, you cannot just use it one-to-one. But I think that you need to analyze the declines that you see, even though you just get a decline without any explanation about it, because you might experience that as being a very valuable feed on how banks and issuers, they detect fraud, because some of the declines are fraud and some of them are of course not fraud. But I think that the only thing I can say is that you need to investigate it and see if you can cluster some of the declines you get and use that as a feedback for the model. Other than that, I can only recommend to chip into some of the merchant collaboration systems that are around the world that connects issuers with the merchants, and especially if you are as mature as Ekle indicates here, that you are actually building models and are looking into the declines, I would really recommend and encourage to do that. And of course also on your side, on Ravelin side, look into the product that you are offering on the transaction score.
Yeah, definitely. And I think there was something I sort of mentioned at the beginning as well. Sort of, the issuer's behavior is going to change a lot over the next month, 2 months, over the next year, 2 years, and kind of monitoring the declines and the decline codes that they're sending back is going to be really important as part of your strategy, and especially soft declines as well. And there's sort of 2 ways in which you can sort of do that as well. You could look at whether they sort of are actually sending soft decline messages back, but also if you're trying to attempt authentication and the transaction is attempt authorization and the transaction is then sent to 3DS, perhaps by the issuer, you could also sort of help to indicate not necessarily a soft decline, but an indication that the issuer is starting to look at applying 3DS under scenarios which would normally be authorized themselves. So I can see there are some other questions, but unfortunately we are sort of out of time. Again, I'm sure Sune and I are both more than happy to kind of answer these questions at a later point. So do feel free to kind of get in touch, and we'll be happy to discuss this with you all later on.